And welcome back. In this video, we're continuing our discussion of the classified balance sheet. In the previous video, we took a look at the asset side of the classified balance sheet and the idea of breaking up our accounts into more relevant classes or categories. And this video takes a look at the other side of the balance sheet, now the liabilities and the owner's equity section. Much like the assets, the first major category here is a category called current liabilities. I'll remind you that current means those things that we're going to probably pay off within the next year. And although officially it's the next operating cycle, most businesses' operating cycle is actually less than a year. So we typically use the test of those assets that would paid or settled, or liabilities, sorry, that would be paid or settled within 1 year. Now, if we take a look at this list of current liabilities, some familiar friends here, the accounts payable, wages payable, all things that we owe for various reasons. The one I want to point out, though, in particular, though, is this one, the current portion of long-term liabilities. And this is where accounting starts to look like accounting and gets really, can be a little bit confusing. And could there be anything more confusing than talking about the current portion of something that's long-term? Well, let's take a look at what happens. Long-term liabilities we would expect to find in another section, not current. Long-term means we're going to be more than a year paying it off. So let's take a look at the next section. In the next section, we have long-term liabilities. So in the liabilities section, we only have two sections, current liabilities and long-term liabilities. And in the long-term liabilities, we have this thing called notes payable less the current portion. Well, that current portion that's referenced here is actually this little chunk that's up here in the current part of the balance sheet. Now, what it means is we have a large debt here, $150,000, plus the $7,500. So our total debt here is $157,500. $7,500 of which we're going to pay off in the next 12 months, and the rest will be paid off sometime after that. So lots of times we have major debt that gets paid off in chunks, and we like to recognize the portion that we're going to have to pay off in the next 12 months in the current portion, and that gives users of our financial statements a little more insight into just how much cash, how many things we're going to have to pay for over the next 12 months. It would be not as useful if we left that out, especially if that was millions of dollars, if we just forgot to tell them about $7.5 million worth of stuff that we had to pay off in the next 12 months, and we just didn't mention that. The last, just before I move on, the total liabilities, and this is sometimes missed when you're doing a classified balance sheet, we actually total up all the liabilities to total liabilities, and all it is the total of the total current liabilities and the long-term liabilities. You'll notice in the setup here, current liabilities we've created a total of $29,000. Because there's only one item in long-term liabilities, we don't actually bother taking a subtotal there. So it's just the 29 plus the 150 gives us the 179,000. And now the last section, being the equity section, described as the owner's claim on assets of a company. Nice official definition. The other way to think about it is this is how much the owners have invested in the business so far, either by direct investment or by leaving the earnings of the company inside the company. So here, Donald Bowie Capital, $164,800. We add that then to the total liabilities. So the total liabilities plus equity gives us the total liabilities and equity. So everything's been broken out into nice sections or classes, both on the asset side and the liabilities equity side of the balance sheet. And this will allow us to carry on and make it easier for us to do some more analysis later. But hopefully with this is giving you a guide so when you have to set up a classified balance sheet, that there will be an opportunity to do that, to follow this format and make it easy for you. Because you're going to do that now, right? The two exercises that would be really good practice for setting up a classified balance sheet, exercise 514 and exercise 515, both really good examples to get you used to the idea of which things live in which parts of the balance sheet. Good luck with that.